Hey guys, it is Julie here with TipRanks, and today we're talking Tesla. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Tesla just reported their Q2 results, and though the company did come out with an earnings and revenue beat, the stock is in the red so far today. So we're going to be looking at those results along with some other updates that Elon Musk provided us, and of course we have a bunch of analyst ratings coming in, and you know with Tesla we do have a variety of price targets, so we'll take a closer look at those as well. Don't forget you can follow along over on the TipRanks website or by downloading the TipRanks mobile app using the link down below, so make sure you check those out. Now let's dive right into Tesla. Now, the Tesla stock has been on a tear lately. After they bottomed out here back in January of 23, they've been soaring. They're currently up 150% year to date. But following their earnings report today, the stock has fallen 7%. And that might come as a bit of a surprise when you consider that Tesla beat on both earnings and revenue expectations. Their Q2 earnings per share came in at 91 cents, which was 11 cents higher than analysts had anticipated. And on the revenue side, they saw a 47% year-over-year growth to $24.9 billion. On top of this, Tesla also confirmed record deliveries. In their second quarter, they delivered 466,140 EVs. This was compared to about 254,000 in the same quarter last year. Tesla said that they are focusing on cost reduction, new product development that will enable future growth, investments in R&D, better vehicle financing options, continuous product improvement, and generation of free cash flow. They expect to remain ahead of their long-term 50% compound annual growth rate with around 1.8 million vehicles for the year. With this, though, Elon Musk did warn that third quarter production would be down slightly. He said that we expect Q3 production will be a little bit down because we've got summer shutdowns for a lot of factory upgrades, so probably just a slight decrease in production in Q3 for sort of global factory upgrades. Another aspect that many are taking note of in this quarter was their gross margins, as they did decline. Their Q2 gross margins came in at 18.2%, which was below analyst expectations of 18.8%. Musk did address this, though, saying that the short-term variances in gross margin and profitability really are minor relative to the long-term picture, adding that it does make sense to sacrifice margins in favor of making more vehicles. Now, another interesting update that we got today is when Elon Musk said Tesla was in discussions to license their full self-driving technology to other automakers. Musk noted, "We are very open to licensing our full self-driving software and hardware to other car companies, and we're already in early discussions with major OEM about using Tesla's FSD. We're not trying to keep this to ourselves." And of course, licensing like that could provide a good boost to the company's overall margins. Tesla also made note of their commitment to being at the forefront of AI development, stating that they've entered a new chapter with the start of production of their Dojo training computers. The company plans on investing more than $1 billion on Project Dojo by the end of 2024. The in-house supercomputer is being designed to handle massive amounts of data, including video from Tesla cars needed to create autonomous driving software. So with all of these Tesla updates hitting the news, it is no surprise that we've had 10 Wall Street analysts reiterate price targets just today. And of course, with Tesla, we always have a wide range of opinions. A Piper Sandler analyst noted that management left the door open to price cuts in the second half and did not express any intention to defend a specific near-term margin threshold. Another analyst noted that management sounds as confident as ever that full self-driving software and other AI products will eventually overwhelm all other considerations. An analyst from Deutsche Bank noted that in the near term, the stock could be influenced by the risk of price cuts. Longer term, they continue to view Tesla as one of the most attractive stories in the auto sector, thanks to leading cost in technology and having secured supply and internal capability to support meaningful and profitable growth. Overall, the Tesla stock has 27 analyst ratings, coming in as a moderate buy. That breaks down to 12 buys, 11 holds, and 4 sells. The average price target is $253, which would be a downside of 6.5%. And of course, we have a very wide range of price targets here, with a low of $112 and a high of $335. Taking a look at our detailed list, we can see those analyst ratings coming in just today. Now on the low end, we do have a sell rating with a downside of 44%, so that's near our low end there. And then we do have some more bullish outlooks as well, including Dan Ives from Wedbush coming in at that 350, which would be an upside of 29%. But you can see a lot of varying opinions on the Tesla stock. So that is a quick overview of what is going on with the Tesla stock and their latest earnings report this week. Now, you guys know I always love hearing from you, and I know the Tesla stock is a bit of a crowd favorite, so make sure you let me know your thoughts in the comments down below. What do you think of this latest quarterly report, and which of these very differing analyst opinions do you agree with? Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those Wall Street analysts are looking at and providing some information and entertainment. Make sure you always do your own research and due diligence. If you made it to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.